Good afternoon, everybody. How's it going? Today is Thursday, October the 23rd. I'm an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure, I got back into some RGTI and QBTS on the short side a little bit, got all out of the positions intraday, reestablished a small short again, kind of into the afternoon pop, so pretty small there, but keeping some. And then I got scared and jumped into some of those quad U calls that we saw going off into the close on size. The amount of call flow that's been going off on that quad U in the short term is very concerning for someone who is short stock. It's just been massive and consistent. There was a ton of it yesterday that helped to pop the stock higher. I don't remember what the expirations were on it for yesterday, honestly, but I don't think they were too far out. And there were like $29 calls, $30 calls. We saw more of that go off, I think, early this morning. And then into the close, we saw these 1 DTE 2650 calls go off. And I'm like, this is just bizarre. Opening too. $163,000 worth. So I'm like, you know what? Just give me peace of mind. If I'm throwing some money in the garbage, so be it. I'm going to jump on board with some of those calls that expire tomorrow. Um, so that's the position update there. As far as the market goes, I mean, very, very strong. I almost think the percentage that the spies are up doesn't do it justice. But the spies are up about 0.6% on the day. The Qs are up 0.9%. That's including a small boost here after hours. It seems to be coming from Intel. IWM is up 1.25%. TLT was down today. A little corrective price action on the TLT that was much needed. The dollar finished pretty flat. Gold finished up 0.25%, gapped up bigger this morning on a further bounce back from a strong close yesterday. But like we talked about this gold a bunch in yesterday's afternoon meeting, kind of expecting this to consolidate, maybe build out a wedge, build out a pattern a little bit more. So nothing too much going on there. Crypto gave us a little bit of a comeback from yesterday's weakness. Bitcoin up 2%, Ethereum up 1%. Surprised it's not more. Solana up pretty solid 6%. And oil had a really big day today. It's worth mentioning. Oil up 4% today. I forgot to mention I got out of VAL in the position update. That's not in there anymore. Been in that one for a while. Really blasted through to my target. The OIH names have been. Look at this OIH chart. The price of oil I think has been weak. Obviously, it's been tricky to predict, but the one prediction that I think has been pretty on point is that the XLE and OIH names would be stronger than oil, kind of regardless of what oil is able to do. And that move there on OIH is really impressive here on this daily chart. Just a complete breakout. VAL is the one that I was in. I liquidated that position today. XLE, we were looking at this yesterday as a potential long through like 87 quarter, 87.50. Not sure if anybody kept that overnight or even got in it at all. Sometimes these energy names, especially the ETF, can be a little bit sloppy and boring and tricky to trade, but pretty good follow through on that as well. Turn things over to the market. So, yesterday was an interesting day, and I don't think that it was a conclusive win for the Bears yesterday because of how well we closed and how big of a downside tail that we got kind of into the equilibrium zone. But I do think that yesterday's weakness was enough to give the Bears a little bit of hope, maybe, because Monday took away that hope, right? Uh, we've been studying to see if this market could break lower ever since the move down on October 10th. On Monday of this week, the bearish consolidation post October 10th broke to the upside, and we've been looking like we're going to get to all-time highs. And, the bull side of the argument that I keep referring to is twofold, most immediately here. One is just now the technicals look super bullish, and two is what I've discussed is the look back on the VIX versus spot move that we had over the course of last week. Uh, it's really only happened, I think, 9 times in history, and every single time it's ever happened, the market has been higher a week later, a month later, a quarter later, a year later. So it's a pretty good track record on a small data set. And but you couple that with the fact that the technicals are bullish, and you got to say, I need to just lean to the side of the bulls here. But the Bears can lean on the fact that you have a brief period of seasonal weakness here that ends early to mid next week. And then yesterday we traded really weak, and we traded weak on no real headlines. And we were able to get down to Monday's low, but didn't really close below it in the SPYs. We even got below 665. 665. So, one of my I just think it's a great exercise to do when you study the market is just look at the technicals of the daily chart for the S&P, the Nasdaq, and the Russell, and just ask yourself very broadly. Keep it simple. Are they bullish? Are they neutral? Are they bearish? And then obviously there's a lot more nuance that you can get into there in terms of extension and positioning and everything else. But I think just asking yourself that question, bullish, bearish, or neutral, is a really good starting point for your trading on telling you, generally speaking, how you should lean. And Monday, firmly, as far as I'm concerned, got us back into the bullish camp from being neutral or even like neutral borderline bearish where we were most of last week. Because you had that penalty candle come in on October 10th. That penalty box candle is one of the ways in which I like to describe the bearish engulfing Maribozu that we saw on October 10th. But Monday took us right back, as far as I'm concerned, firmly to bullishness. And again, keep it simple, stupid. If the market is bullish, you want to be focused more on the longs than on the shorts. You want to be non-aggressive on your shorts, more aggressive on your longs. But then yesterday, we ticked back into neutral territory, even if we couldn't close there. And it was enough to be noticeable and maybe give you a little bit of hope if you're trying to be bearish with this market, right? And we're looking at that Nvidia 180 is a really big level, and Palantir 174. We got below that yesterday. That was a really big level that we closed at or back above both of them. Nvidia in the pre-market this morning was back to that 180 and a little bit below it. And I'm like, okay, this Nvidia certainly still doesn't look good. And it's like the most important stock in the universe. We're watching this AI trade not go well. Oracle is the name to watch per Goldman Sachs. And today gave an oversold bounce back, but Oracle overall has not traded well. And then to give you a little bit more hope if you're a bear, the reaction to some of these earnings reports, at least where they were in the pre-market, were also, notable if you're on the bear side of things. We had Tesla set to open up at 420 and quickly lost that 420. You had IBM with a pretty weak report, pretty weak reaction report. You had LRCX, another high flyer that's been moving a lot of these names. Report what I thought was a pretty good report, but actually also be negative on it. You had STM, which is a semiconductor, smoked on its earnings report. You had a bearish analyst note come out on Micron in the pre-market this morning. And then all of a sudden it's like, yeah, you look at the SPYs and you ask yourself, bullish, bearish, neutral. It's bullish. Yesterday is something to take notice of. It didn't necessarily change the bullish trajectory of the SPYs, but it's noticeable how weak you're able to get. And then when you're doing your research in the pre-market, you're kind of remembering the notable weakness that we had yesterday morning at the index level, combined with the fact that you're seeing Nvidia again sitting below 180 and not looking good, and Tesla, IBM, LRCX all down on earnings, Oracle's daily doesn't look good, Micron negative note, STM lower, and all of a sudden maybe you could be asking yourself like, hey, there's a chance here that Monday is a little bit of an upside shakeout if we're able to get right back below 165 in the SPYs. And with all the weakness that I'm looking at, it becomes a real possibility. So honestly, that's where my head was at this morning. I didn't really do any new adding on that thought process because the price action never really gave me the opportunity to confirm it. Which I said I did do some yesterday. Like I sized up a little bit and like my Nvidia short, I was able to cover some of the down move, but I sized up a little bit and a couple of things that I was short when we saw things breaking yesterday. I did not do that today, but I was certainly trigger happy in terms of, hey, if I can start to see this stuff go to the downside and these names are not able to recover, then I might want to push this if I start to see some confirming signals. And we never got those confirming signals. The names that I just typed up, well, you guys know what happened today. Tesla, incredible. Um, broke support and broke resistance all on the same day. It's a beautiful looking engulfing candlestick here by the close. Good volume on it. Was really squeezing higher into the close. Had one pretty good day trade to the short side on some size. That was more of a scalp when it was first approaching that 449, 450. But I got out of that really quickly once it satisfied the 5 minute extension. And then here at the end of the day, Tesla closed green and looks great. What a comeback from IBM too. I guess technically it's still red on the day, but they bought this thing back $20 off of its low. So nothing to be concerned about there when you're looking at IBM. LRCX, notable in the pre-market, good looking earnings, but it's trading down on it. Well, that's a hell of a red to green move. This is another chart. LRCX is looking fantastic. Um, you could probably be long list versus 145 for market continuation in this name. Looks great. STM didn't recover. Who cares? Oracle was able to give an oversold bounce, but this stock is not out of the woods yet, as far as I'm concerned. And Micron, which had I don't think it was a downgrade. I think it was a price target increase with some analyst commentary that they don't think that Micron's going to be able to compete with Samsung. Um, Regardless of that, this thing was still able to hold its uptrend and be incredibly strong, and also have a red to green move. And with all of those potential areas for concern disappearing, so did any chance of this market losing Monday's low, losing the 665, and returning from bullish to neutral. And at the end of the day here, I don't think we quite got an all-time high close for the spies, but we are sure close. And again, it's all looking solid. We've got a CPI number tomorrow. We'll see how that goes. We'll review the research reports tomorrow morning on it. But what I've read on the CPI tomorrow is that the market is not expecting a huge move. I don't think that there's a huge move being priced in on CPI tomorrow, and that's because no one thinks that the CPI number is going to change what the Fed does a week from now. So it'll be notable if it comes in super hot. You'll see the market go down, but most likely, if CPI is in line, the market's going to move higher, and if CPI is light, the market's gonna move higher. That's the expectations per the both J.P. Morgan and the Goldman Sachs notes that I read this morning, if I'm remembering that correctly. So we'll see how CPI plays out. Obviously, if it were to come in really hot, it could derail some aspect of this bull run and get us back down. But it's not something that you want to be counting on, right? You can take the technicals for what they are. The SPY technicals are great. The Q technicals are great. The IWM technicals are pretty good. I'd like to see the IWM get above 247.50 to 248 to confirm that a little bit more. Um, and I think that pretty much covers it. Yeah, I don't really have too much else to talk about. I mean, I traded a decent amount of RGTI and QBTS again. I mean, this nonsense is exhausting. The back and forth. I've never seen anything like this in my entire career in the business. uh Granted, there hasn't been many circumstances of situations where the government can potentially just come in and start taking stakes in companies. It's a pretty new factor. And maybe this just becomes the new thing. If you want to pump your stock, just start leaking rumors that the government's going to buy a stake in it, and it just makes it very, very hard to be a short seller right now, knowing that any name at any time, um, stocks could just rip higher because somebody is saying that maybe the government's going to take a stake on it. But I mean, this was just a complete circus. Last night you saw that maybe the government's going to take a stake in quantum names. Pre-market this morning, we saw the government deny it. So you got a little bit of a downtick on that. But then you saw, I think, executives at RGTI saying, no, we're talking to them, it's going to happen. And then you see various resources, CNBC, Wall Street Journal, whoever else, just going back and forth all day. The company saying they're talking to them, the government consistently saying that they're not. It was literally just back and forth on this stuff all day. It was really kind of pathetic, honestly. Um, at the end of the day, though, I am not a fan of these names for more than a bounce back in them. That's kind of what I was saying yesterday when I was buying them. You know, I think that these stocks are actually going much lower unless the government takes a stake in them. I think they're going much lower. But you just got to move from like RGTI from $58 down to $34 in like 6 trading sessions. While I think bigger picture these names continue down, there's a great opportunity to come in for an oversold bounce in these things that could get them back to mid 40 mid 40s, 45, 46, 47. I think is possible just within an oversold bounce back. Even that was my expectation yesterday when I was talking about it with you guys when I was buying them. That was my expectation for that kind of a bounce back even before we got all the insane headlines today that were so back and forth. So at the end of the day, a little bit of a doji day in this RGTI. ADMA on the daily is at 42.73. I think it has the capacity to overshoot that. And while I like the shorter term long, I prefer the bigger picture short, but I don't want to chase price, right? We don't want to chase price to the downside. We can push to the downside when things are really breaking, but we don't want to chase price to the downside. And that's why, even as someone who's bearish on these names, I was flipping them long yesterday. And then, getting back involved a little bit on the short side at various points at highs today. But what I was saying with my game plan was I got a lot of positive P&L in these from how I've traded them. I'm going to get back in short, but I'm going to start very, very small, and I'm willing to give this room up to, you know, those mid to upper 40s as needed with RGTI, QBTS. So we'll see how those play out. The quad U was weaker today, but again, the option flow is just concerning. The UWAMI, it's kind of wedging here a little bit. I have a very small position in this one at this point. It's another one that has paid pretty well. And then Nvidia holding back above 180, still within this 180 to 185 range. We saw some bearish flow go off into the close in NVDL for November for $88 puts. I think this is the 2x levered long, right? So you don't see the larger institutional order flow hit on the levered ETFs too much. So a lot of times that's pretty notable when that happens. $1.36 million bear sweep hitting the tape there. Pretty much at the money. So we'll keep an eye on that one as well. And I think that's all that I've got, honestly. Just mainly, spent most of my day slightly frustrated about some of the stuff that I thought I was looking at in the pre-market with those earnings names just getting bought back with the market the way that they did when I had an expectation that there was a chance that we could break and it could potentially try to push the shorts. But you never gave me the signal to really do that, and obviously things completely reversed higher. So that's all that I got. I am, of course, happy to answer any questions that any trader has about literally anything. So feel free to get them into the VTF, and I'll do my best to answer them. Let's see here from TG. Tesla had a daily squeeze, and with this dip after earnings getting bought, game is on. Yeah, I couldn't agree more. Tesla looks fantastic after today. Don't understand why the business is completely deteriorating, but the technicals look phenomenal, and that's all that matters. So 450 here looks like your next spot for a leg higher on the break of that 450. but 440 was the initial level that I had been looking at. So this thing giving a bullish engulfing to recapture 420 and close above 440 all in the same day. I agree. Tesla looks great for higher prices, assuming that the market continues, and there's no reason to think that the market's not going to continue because, like we just discussed, it is bullish. Anthropic confirms Google Cloud deal worth billions of dollars. Google moving on that. Looks like we're getting a little Google uptick on that. That's great. They uptick the stocks on the rumor, and then they uptick the stocks on the news. Uh, what else here? Intel trading well. Something going on with Amazon. Is Amazon going down on the headline? Not really. Down 70 cents. From John here. Any thoughts on IBIT and Monster call transactions that I reported? I didn't look at it closely, but I know that the MSTR calls were massive on it. I have not been a bull on this stock at all, but I kind of missed the boat on a lot of the last leg of the short, unfortunately. I would not short this here, that's for sure. And I don't know the details on. I know that there were size, but I don't know the details in terms of expiration on those calls. But at this point, I would say with as beat up as MSTR is, I feel like everybody forgot about this name in some ways because there's been so many hotter crypto stocks recently. October 31st and 11/7. Yeah, I like the idea of being long this MSTR here for a trade over the course of the next few weeks. Long versus these recent lows with that option flow to see if we can get going. I'm definitely no crypto expert, but a little bit of recovery in Bitcoin today. The most interesting thing to me about Bitcoin right now is not Bitcoin in and of itself. It's the fact that Bitcoin broke down as much as it did and the market didn't. Right? That's been one of several things that we've been talking about how impressive the downside cushioning is at the index level, despite the VIX squeeze, the crypto sell off, everything else that comes in, the market just continues to hold in. That's actually the more notable, more impressive thing to me about the equity market than anything else. And it makes you concerned about, well, one, what happens if the VIX crunches all the way back down? Well, guess what? We saw that happen this week, and that meant that the market squeezed all the way back higher. What happens if crypto starts to bounce back? Well, similar potential thought process there. The market never went down, but the market will certainly go up most likely if the crypto bounce that started today is really able to continue. And so looks decent. I think this IBIT looks pretty good if it's able to recapture 64, 64 to 64.50 probably. But given the option flow, front running large order option flow when it's consistent has been something that generally works really well. Definitely not 100%. There's other factors you got to pay attention to. But that's the reason why I started buying those 1 DTE UUUU calls. It's like, you guys know if you've been training with me for a long time how much of a stickler I am to my game plans. Like, I live and die by my game plans because I think that good game planning is the only way that you can have consistency in the market, and therefore the only way that you can be a consistently profitable trader is if you've got really good game plans and then have the discipline to be able to follow them. So when I'm in a position, I follow that game plan, but at the same time, it's like, man, I want to follow my game plan, which is short this quad U, but the option flow is scaring the hell out of me because of just how often when it's that big and that consistent that it's right. To some degree, a lot of times it becomes a self-fulfilling prophecy. So it's like, all right, I'm jumping in on some of these, quad U calls for tomorrow, and if I throw some money in the garbage, I can live with that. I could totally, totally live with that. But if news drops in this quad U and it's at $29-$30 tomorrow, I'll have a problem if I don't have a way to hedge it. So, good stuff there, John. Definitely worth watching. What's next here from Dorothy? If you're in the money enough on an intraday day trade, do you ever hold it overnight and have it lead to a swing, and then a position trade? Yeah, 100%. As a matter of fact, that's my favorite way, and I'm a huge advocate of doing that. It's my favorite way to keep positions overnight, and I'm a huge advocate of people doing that. The longer that I've been in the trading business, the more that I have felt pure day trading is reward limiting. So I have not been a pure day trader for a very long time. And I probably haven't gone home flat in probably 8 years at this point. So I've always got overnight positions, and you never know what can happen overnight. You never know what news can hit overnight. But I'm a big believer in risking money that you've already made in order to make more. That's how you maximize reward. We talk about this here on the team all the time. You take that counter trend retracement trade, keep 10 to 40% of the position, depending on the circumstance, in case that retracement becomes a reversal. Or if you have a really strong profit cushion on a trade, keep it. Because what's the worst that happens? The worst that happens is it gaps down against you and you give back the money that you've already made. What's the best that happens is you get paid more and more and more, and you could potentially ride a trend that just continues. I think we were talking about the Sandisk trend today, was it, at a certain point? Maybe it was yesterday morning, when the thing was breaking up before it failed. And Sandisk just gave massive continuation, presumably off of the LRCX earnings today, which LRCX is only up 4%, but Sandisk was up 14%. So this stock has just been a complete and utter monster. $50 stock in the beginning of September, $168 stock today. And the chat in the VTF that I was having, I think with Tate just yesterday, was like, how can you still be in this? And I would say almost the opposite. If you've got good trailing rules for the daily chart, how could you not still be in it? If you trail even a small percentage of your position, and you follow the trailing rules that I espouse in my training program classes, you wherever you're long from, you're still in the position. Whether you're long from the initial breakout in the beginning of September, or one of the technical pullbacks, or the 120 support, or the 135 to 137 breakout that we were discussing just a week or two ago, or give another breakout today. Wherever you're long from in this thing, you could still be long it, and that's how you maximize reward. It doesn't take a lot of instances of you being long from a really good price and catching a beautiful trend on the daily chart to make up for small time frame day trading losses over and over and over and over again, because the reward profile and stuff, when it's working out for you, is just so big. And the bottom line is, what trading comes down to is risk, reward, and probability of success. And as a trader, you need to have game plans and strategies that focus on minimizing risk and maximizing reward. And this is on the reward side of it. um, I put stops on, but sometimes I feel they can go right through and not fill me. Well, if you have a stop in, and it's trading through the price during hours, it should fill you. Yeah, if it gaps below you, there's nothing you can do about that. But that's why you're doing it with a cushion to begin with, right? You're not swinging positions that are against you. You're swinging positions that are in your favor. So if it gaps against you, fine. If it really gaps very badly because a news event happened, it just is what it is. It just sucks. It's just kind of bad luck. But overall, that's not going to happen too often. I don't trail just based on moving averages. I think that moving averages are great tools. I'm a big fan of the 8 and 21 EMA, but I do not think that moving averages are support. I think that they are tools to help you measure equilibrium for the time frame that you're looking at. So I trail based on pivots. I've got three trailing rules that I follow, and I have a training program class, that the traders on the team get access to here, where I probably spend an hour going over what those rules are in depth. So I'm not going to do it in that degree of depth right now, but just to mention the rules real briefly, it is pivot low, ADMA confirmation, new highs. So any pivot low on the daily chart, the ADMA has confirmed that, meaning the price of the ADMA is at least the price of the pivot, and then a new high comes in because you don't have an uptrend, a higher high, higher low pattern until the new high actually comes in. And then you can raise your stop to that last pivot low, and you can continue to do that the entire way up here, and you would just still be in it, like with the Sandisk as an example. So thanks for the question, Dorothy. From TG is long salt. What is SOLT? Oh, is this like a levered Solana? Yeah, 2x Solana. Yeah, 10% day today. BMNR. Yeah, BMNR still doesn't go though, right? I actually don't think that this BMNR looks good below 50. That was the price that I had been mentioning that other day. And not a great snapback in this thing either today. I guess Ethereum was a little bit weaker too. I would want to see this thing quickly get back above 51. From Jim, you handle positions going against you really well. I'm trying to get more comfortable with this on my higher time frame trades. I don't have an issue with this in my swing account, but in my prop account, because I'm looking at lower time frames all day and tend to run out of stock intraday. This is more so because of an impulse since I'm looking at the chart all day. How do you compartmentalize your day trades with your swings? Um, sure, lot to unpack with that question. Um, so there's probably a whole bunch of ways that I can and should answer this and a bunch of things that I should get into, but I would start because I was already kind of getting into the mindset of this, I think when I was answering Dorothy's question on the importance of having a preset game plan for any trade that you get in prior to getting into it and then following it. And I think that does help me compartmentalize the trades that I'm in, and it helps me not freak out if a position is going against me, provided that it's still within the game plan that I've established for the trade. Um, not freak out on negative P&L for a position or the day or what the number looks like or anything like that. Just because again, the game plan is there. So I'm looking at charts all day as well. Obviously, I'm in front of the computer here all day. Um, but like, I don't. This is probably not a great answer. While I'm looking at the charts all day, I sometimes don't really care what they're telling me. If that makes any sense, it's like I'm absorbing the information, but I'm not really allowing myself to care about the information, and I mean that in a good way. Because from a trading psychology perspective, where people get messed up and become undisciplined and start to not follow their game plans is because they see something on that 5 minute chart and they get so focused on that time frame and they overly care about it in a way that causes them to sacrifice the work that they've actually done on the game plan for the trade itself. Very similar, very different. Again, just because it's top of mind is like with this quad U short that I'm in. I've got a game plan on this, and it's like I'm seeing the bullish option flow go off yesterday, and I think because of that bullish option flow, because of the gamma effect on that flow, this was like the strongest meme stock in the stock market yesterday. And it I've sized down on the position, obviously, in the move from $27 to 19. Uh, but I do have a sizable position on this, so I'm not happy when I see that it's the strongest meme stock that's out there, and I'm certainly not happy when I'm seeing the massive bullish flow go off, especially just in this environment where any stock could have a government stake in it. I mean, we saw I always forget the symbol. It starts with an N. Is it NAK? No, I forget. The one where just like a week ago, it's a rare earth company that the government said they might take a stake in, and the stock went up like 180%, and now it's come all the way back down. But hell, for all I know, seeing flow like that go off when you're seeing smart money do that, no, not MP. Um, though MP crashed all the way back down too. If you really want me to, I could look it up and find it. I've got somewhere in one of my notes here. I don't want to get too off topic. Let me see if I can just find it really quick because it's going to annoy me if I don't know the symbol. NVA, NVA. This one. This is a rare earth company. that, was a $27 stock. And then I don't remember exactly. I think that, whatever, just had a big follow through update today because rare earths were running. And then on the 14th, there was chatter that they spoke to the US government and the US government might take a stake in them. And, the thing gapped from 34 to 57 and then ran from 57 to 81. I don't think that you would have that big of a move, but it could get to 37 off of that. Keep in mind this company, $6 billion market cap at highest here, $73 million in revenue in the calendar year of 2024. Doesn't matter though if the government comes in and takes a stake in it. Obviously, I don't know. Just that degree of flow is just kind of scaring me. But it's like I said, I'm looking at it and I'm noting it, but I'm not letting myself care generally. And you can apply that to looking at the 5 minute chart. That's how I feel a lot of times when I'm looking at a 5 minute chart and I've got a trade on, especially if it's a swing trade that has a specific game plan where I'm taking note of all the information, but I'm not changing my game plan. It's just the UUUU stuff got so extreme where I was like, all right, I'm just going to follow in some of these calls and give myself a little bit of protection on it while I continue to follow the game plan that I have for the trade. Um, the other thing that you got to keep in mind about the difference between your prop account and your retail account when you're implementing more of like a build in build out approach, which is what I primarily do with my own trading, mixed in with a lot of the cash flow trading that we've spent a lot of time talking about in the past, is you just got to be careful about your sizing and your leverage on the prop side of it. It's fantastic on the prop side to know that you have access to all of this capital should you need it at the right times. It provides a tremendous overall advantage if you use it properly. But if you use it improperly, if you get too big at the wrong times, if you get too much size, because you're focused on a 5 minute chart, but then you want to give it the space on a daily chart or something like that, I think that's where you run into trouble. So it's like, when I'm putting on some of these trades and it's like I'm gonna build into QBTS or whatever. And when I said that I was starting QBTS today, uh whatever, here's my trade executions on it. When I put the first short on at 32.50, I was like, I'm pretty sure I'm too early on this. I just want to have the feeler on. And I think I shorted 1,000 shares there. Like it wasn't like an insane position. And I was like, I'm gonna. Oh, this is QBTS. But whatever. It was the same thing for both of them. Started relatively small. Was gonna build into them, and I know that size for this trade, especially with the P&L cushion that I have in these things now from the last week or so plus, that's just not a big deal. So it's like, all right, I'm gonna start there. I'm gonna build in, and I know I can work the trade. And I love these things with the big volatility like that because it's like yesterday when we were going long, um, QBTS and RGTI. I know Dennis was in this with me. It was meant to just be a shorter term trade. I was like, I don't even need the trade to work for me to make money because the way that this thing moves, if this thing can just go sideways for me for the whole rest of the day, I'm gonna end up making money. Let alone if it works, because the way that it moves and the way that my game plan is, these things move so crazy, but in like a good way, and the price is appropriate that I can just kind of trade the hell out of it, even into sideways movements, and still be able to kind of make money from it. Anyway, starting to digress a little bit. I think that answers your question, Jim. Let me know if there's any follow-ups on it. Um, let's see here. Where was I? From Tate. What's the ratio between the size you take on your initial swing and the size you manage intraday for cash flow, especially in a way that leaves your flexibility to manage without prematurely hurting the position by sizing at the wrong time? I think it very much depends on the thought process I have going into the trade. Um, there's a very different thought process I have, and I can just use this QBTS as an example. When I first started QBTS, I shorted it on October 16th on the way down. I think at like 43 and change. I don't remember. And I was going to have a cash flow game plan for that. Um, but I'm starting it on the way down in that situation, and I think that I'm right, and I think I'm right now. So I'm taking like a lot of size on my initial entry versus the amount of stock that I'm going to be buying, that I'm going to be kind of buying back and forth with cash flow. A completely separate example of that is what I just described from today, where like, all right, the game plan on this trade was I'm gonna short 1,000 shares. I'm gonna short 1,000 shares here at 32.50 with a target of $30 with a game plan where I'm gonna cover 100 shares every 25 cents, and that's it. But I'm also going to add in an additional 100 shares every 25 cents on the way up. That is so much less size on the initial entry because I'm saying to myself on the first trade that I just described, I'm shooting on the way down. I'm saying I'm right and I'm right now, and I want to push this. And I want to take size and cover small incrementally and work it for cash flow in a small way. This I'm saying to myself, I think I'm probably wrong. I think I'm probably early. There's a good chance I'm early. I'm going to give myself a lot of space to be able to build this in. I'm just going to short 1,000 shares here. I'll cover 100 shares every 25 cents. Target of $30. You can see I got out at exactly $30. And then, if I'm covering 100 shares every 25 cents on the way down out of 1,000 share initial tier size, that's 10% of the initial tier. That's a very large percentage, especially compared to the first trade. But I'm also giving myself the room to be able to build in all the way up and kind of work the position to the point where even just the moderate amount of executions that I had here, when it was back down to 32.50, at that point, I'm 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, uh, you know, 12 times 12 fills times $25 a fill in the money by the time I'm even back to break even on the initial entry on that trade. And that's kind of how I want that. Um, so I hope that helps, Mr. Tate. What else here? Sheldon, do you have rules to increase size as a trade is working in your favor to double down on a winner? That's a great question. So was just describing kind of recently on the way down here with these moves, with some of these names that I really wanted to push the downside. And Sheldon, I'm not sure if you were listening at the time, but I also was talking about how one of the things that I've actually never been great at as a trader is adding as things move in my favor. It's never been a strong point for me in my trading. But I really wanted to be able to do that in my QBTS, in my RGTI, in my OKLO short, and kind of all these memes that I've been short as they were breaking to the downside. So the answer is not a good answer. I don't have great rules in place for this at this time, and it's probably why it's one of the weak parts of my trading. I like to think that I have rules in place for any trading scenario that I could find myself in, and for the most part, I do. But again, that's just the weaker part of my game, and I don't have the rules in the same way. So I'm probably still in the process of developing those. I can tell you, what I did do though when I was adding on the way down was just kind of getting like technical confirmation that I was right. And then at certain points saying I want to increase my target on the trade. And I'm going to increase the target on my trade by having more size. And I can do that at this point because I've got more cushioning. And then at a certain point, I remember there was somewhere in this RGTI on the way down, I want to say in the upper 40s, where I was like, I just covered a little bit of stock at, I'm just gonna make up a price, $49 even. And then I just whacked a whole bunch of extra stock at $49.10. Because I'm still following the game plan, my preset game plan for the original trade, but now I'm adding on additional stock to create a more distant final target for the trade, and then kind of adding that into the overall game plan for the initial trade that I had on to begin with, if that makes sense. So that's kind of what I was doing with these things on the way down to get more out of it. Uh, Tachyon, my least favorite trading software in history. We have it at T3 though. We do offer Tachyon at T3. I think I think we've got like 5 of our 500 traders are on that trading software. Uh, let's see. Lost my thought. Thoughts on IREN? Good snapback in IREN, crypto related names, so we'll move a little bit with the crypto stuff. I still like these names for lower, but I would not short it right now. They look like higher before lower. Kind of similar to what I was saying with quantum. And I would rather be long the crypto related names right now after the call flow we saw in MSTR and Bitcoin. I'd rather be long those than probably any other meme stocks that are out there. I'd rather be long the crypto names, I think, compared to the quantum names or the rare earth names or any of them. I think that those are the best ones to have. And it's a good snapback for IRN today, along with some of the other crypto stuff. Need Ethereum to move in order for BMNR to start working. Yeah, Ethereum might be weak today, honestly. I know that they're a little green, but um, I feel like Ethereum should have been up more like how Solana was, and it wasn't. So worth worth noting. From John, Goog, LRCX, any other stocks you see are the strongest to look to buy during intraday dips? I do like that Google a lot. Probably you can add Tesla to that list after today too. Be a little careful chasing price, but you can probably add Tesla to that list. Otherwise, we'll try to see what we find tomorrow when we do our morning research. But market's looking good. Yeah, Jim, just seeing your follow up here, capital access definitely makes it easier to size up for the day trades, but that's where you get hung up. Um, it's a balancing act. Keep in mind, like what your cash amount level is in your stocks. I mean, in your account here versus your capital access level, because we provide massive amounts of leverage. You should not be using it all the time. You shouldn't be using all of it even the vast majority of the time. It's there for when you really, really need it. When you really, really need it. So, you could even be trading certain things more based on your cash amount or a small amount of leverage, or have a build-in strategy on certain things where that leverage will increase at certain points, which inherently means that the cash is probably decreasing because the position is probably going against you, where the building in of it becomes a little bit more appropriate. But it kind of, I just keep going back to this QBTS example. It kind of circles back to that. Like what is the goal of the trade in the process where you're putting it on? And I can give you these two different QBTS trades I've taken recently to the short side, and just how different they were. Right, the one on the way down, when I think I'm right and I got it right now, that's when I'm really utilizing that T3 capital access. In the trade today, where I'm like, I think I'm early. I'm going to start small. I'm going to give it a lot of room. I'm not, using the heavy T3 capital access for that whatsoever. If the trade continued to $38 straight up, then I will be a lot bigger on it, and then I'll have built into the point where I'm utilizing a lot more of that capital access. But based on my game plan, that's where it'll make more sense to have more of that size at that point. So, I think that might help. So I hope it does. Uh, when you have a lot of size on, how does it not mess with you when it goes against you before it goes in your favor? Honestly, negative P&L, I don't want to say it doesn't impact me. It definitely does. Like I'm a human being. I certainly lose control of my emotions and I get upset. The biggest levels of growth that I've had over the course of my career are the fact that I don't let it impact what I do. So it's like, yeah, do I want to be down money? No, I never want to be down money. Sometimes I'm down really big amounts of money and it doesn't feel good and it makes me upset. But I really don't let it impact what I do in any circumstance. Um, so it messes with me, but it's like I said before, I think it's your first day here in the VTF, so I will I'll repeat something that I say very often about trading that I think is the true key to success in this business. It's a simple series of statements. I like to say it a lot because I like to remind everybody that this is what it takes to be successful in the business. So the goal of a trader is to be what we call consistently profitable. That's your goal. You want to be a consistently profitable trader. Let's break that down. The only way that you can be a consistently profitable trader is if you are consistent in your approach in regards to the market. You have to have a consistent approach. It's the only way you can be consistently profitable. The only way that you can have a consistent approach is if you have rules that govern everything you do for your trading in every situation. A game plan is the manifestation of your rules. A game plan, therefore, is the manifestation of consistency. So you create a game plan for any trade that you get involved in before you get involved in that trade on what that game plan is going to look like insofar as risk management, reward maximization, entry, exit, everything. And then you have to have the discipline to be able to follow that to the letter of the law, no matter what happens, no matter how much size you have, no matter how many executions you have, no matter how much your P&L is positive or negative or anything else that's going on in life or whatever else. If you can't do that, you can't be a consistently profitable trader. And the strategy doesn't matter. Like, we spent a lot of time here talking about technical analysis and strategy and everything else. The strategy doesn't matter. Um, there's a million strategies that can make traders a lot of money, and traders can lose money following every single one of those strategies. I've seen people be successful in this business with so many different strategies, so many different products, so many different time frames. That doesn't matter. What matters is that it's the strategy that is right for you and your personality that you've developed over time, and you're able to follow the rules for it. Because as many times as I've seen people be successful in a given strategy, I have seen people follow the exact same strategy and lose money. So strategy is important, especially for newer traders. Figuring out, and developing your edge in trading is important, but it's not really what creates long-term success. What creates long-term success is having any strategy that gives you like an edge and having the rules and the consistency to be able to follow it. In so many ways, I feel like trading is more of a math game than it actually is like a technical analysis chart pattern game or anything like that. Uh, from Greg, where's your stop loss in that example? Is it based on money loss? I don't remember which example we were talking about at the time, but as you probably know, I most of the time don't trade with stops. So it's an area combined with a money lost factor is definitely what I'm looking at. Um, so the thing is like, I don't know, just going back to the QBTS 5 minute chart that I have on here, it's like time is my friend when I trade because it's like I said before, when QBTS got back to my initial entry price of 32.50, I'm now solidly in the money. And if the thing dropped and then it went back to 32.50, I'd be even more in the money. And then if it went up and it went back to 32.50, I'd be even more in the money. And that enables me inherently to actually be able to give it more and more and more room against me over time if the position goes against me. A lot of that depends on initial sizing as well. The fact that I started small in this position means that I'm making even more money as a percentage of the initial position that I put on, which means that I can hold this against me even further than I would if I started larger. So yeah, it is kind of based on money lost. And even if I hit a point, like it depends a little bit on the situation. I did hard stop myself out of, relatively recently STX, some of my DC position, and some of my Sandisk position when I was short all through those names. Like I hard stopped out of them. It's not usually how I exit positions, even when I decide like, all right, like my game plan to exit a position for a loss is more about, for me, massaging down my size than anything else. Where I hit a certain point on a trade, like I've been doing this with my Uvixi long. I've been doing this with my SoFi short. I just those trades were more based on time than on price. I told myself I wanted to kind of be out of those positions by the end of October. And now that we're approaching the end of October, I have a game plan built in for myself where I'm not just hard stopping out of them. I'm massaging my way out of the positions here as we're, kind of getting into the end of the month slowly. Doing that a little bit with Quad U also, actually, but that's just a function of how much size I built into it that with that trade. So I hope that helps. I'm losing part of the back and forth here, so I'm not following what you're saying there fully, Liam. Because it sounds like 'cause wasn't following some of what you're saying, 'cause it looked like it was back and forth with Jim more than it was to me. But if you want to ask me a specific question about the chart that you posted, I could help. From Tate here, as a follow-up, can you give a ratio of how much you would start with relative to how much you want to build into positions where you plan to scale against yourself? It's very, very situationally dependent. Honestly, I don't have a set amount on that. It's more. I would say that the two examples in the QBTS are almost extreme. One was extreme, like I want a lot of the size right now because I think I'm right now. This one was the opposite. It was like I'm gonna start really small right now and let myself build into this position, because I think I'm way too early on it, but I don't mind starting some here in case it does exactly what it did. I still had not bad P&L at the end of the day in this QBTS, considering the amount of size that I put on, an initial 1,000 share position there. It went all the way down to 30, which was my target. I got decent P&L here with it at the end of the day. A lot of times, it's somewhere in the middle of those two situations, though. So it's much more of a scale based on how much, you know, counter trend with momentum, counter momentum. What are my expectations for the trade if it works, right? How wide or how far is the target that I have on the trade? All of those things are going to impact those scale situations. So I really don't have an answer for you on that. It's very situationally dependent. Do you all offer Thinkorswim trading software? No. Thinkorswim is proprietary to Schwab, I think at this point, originally TD. T3, broadly speaking, we've got Stone Trader Pro, Dash Trader, Silex, Tachyon, and Lightspeed on the equity side. And some of those we have a T3 trading group, some of those we have a T3 global. It's not 100% across the board. From Shoaib, could you please briefly go over how you take a starter position and then build on it when it's working? Yeah, that's kind of what I was going over off of somebody else's question earlier when I said don't it's not what I'm best at, and I'm working on that. Um, so could you go over how you take a starter position and then build on it when it's working, meaning sizing up when the trade is working? I don't do a lot of that. Of course, it would depend on the account size, but what percentage of risk should be assigned risk in taking the starter position? So, um, I'm just thinking. It definitely, like you said, depends on your account. Uh, when I was like a new trader at T3, I started with $5,000 in my account, um, which the minimum capital contribution is higher than that now. But when I started, that was the minimum. If on that size of an account, there's no such thing as just putting on a feeler and letting it run against you, because any amount of size can have a significant impact on the account that you have. So for people who are working with smaller accounts, you almost can't even do that. And this circles back to something I've talked about in the past that I've struggled with here in some of the meetings, which is going over what I think is the right way for a trader to trade versus going over the way that I trade, because sometimes they don't coincide perfectly. Um, but based on the feedback that traders have given me over time, I've spent more and more time just talking about the way that I trade, even if it's not necessarily right for everybody, and trying obviously also just to talk about more broadly what I think is the right way for trader X to trade. So this one's a little bit of a tricky answer, I think, because for certain people, I don't think you can take feelers at all. You can't have a small starter position and have it go against you, because that becomes really significant really quickly. Um, but if you've got a larger account, that filler position might just be a small percentage of the cash level of the account, not even including any of the leverage that you're actually putting on. In which case, you could let 100 shares run against you 100 points, and it's going to be okay. That's obviously a little bit of an exaggerated example, but I'm sure you kind of get the point. Um, you know, the bottom. So I don't have a great answer for you on this. The bottom line is it's small. Like, when I put that QBTS on 1,000 shares and I felt that I was early, uh, it was like I don't really care, because that is how small that is to me at that spot. Um, I don't care if that goes $3 against me off that. And in fact, I'll just keep getting slightly heavier and slightly heavier and slightly heavier as it goes against me. So yeah, I think that I don't have a direct answer for you, but I think that the answer is the size is an inconsequential amount, and that's what can count as a starter position. And for some people, there is no such thing as an inconsequential amount. From Vincent, so you have a set of rules and you follow them, then the market changes and the system that you trade doesn't work. How do you realize, this is a great question, how do you realize the market is not the same and preserve capital? Sure. So, uh, I mean, the direct question is how do you realize that the market has changed? And the number one thing I look for in studying market environments is flow of funds information, which is the stuff that we spend so much time talking about in morning and afternoon meetings. That comes off of a lot of the institutional research that we're always reading from, Pat's note and whatever, some of the stuff that I sometimes provide. Um, like seeing that asymmetric risk to the downside or seeing the opposite, seeing when there's going to be a lot of bull flow that potentially comes in. From my experience, it's flow of funds data, market gamma, what the systematics are doing, all the stuff that we're always talking about. What I've come to realize is that is what actually creates market environment. I never realized that for the first 10 years of my career. I never realized that until a little bit after COVID. Um, but market environment is a direct result of market structure. So you have to study market structure. That's why I spend so much time talking about it. To me, for my stage of my career, market structure is the most important thing. It's the most important thing. And that's why I spend the most amount of time at this stage in my career studying what the current status is of market structure. Um, because it dictates exactly what you're talking about here, what the market environment is, and therefore what strategies to be focused on, and what your expectations can basically be on trades. So if it helps, how do you know what data to keep track of? Well, um, I mean, it's flow of funds information that is sizable enough to create market impact. And I think we spent enough time talking about this, but as a brief overview, um, there are certain market structure, flow of funds, pieces of information that are entirely quantifiable. And while I personally don't have the ability to be able to quantify it, luckily Goldman Sachs, Bank of America, Morgan Stanley, and Nomura do it for me, and I read the data that they provide. So anything that's large enough to have market impact, it's the systematics, it's the CTA trend following community, it's the vol control community, it is the gamma level of the market, and increasingly so the zero DTE and one DTE gamma structure of the market, not just the bigger picture gamma. Um, and then you've got, your long only funds, your hedge funds, institutions, and retail. That stuff is a little bit less quantifiable, because a lot of that's discretionary. But you can still pay attention to, when, like in February, when the market made all-time highs in February, and we were talking about how you need to lean to the short side, we were able to see that like long short funds were long at the 98th percentile on a 5-year look back. So that is still to some degree quantifiable, but it's more difficult to predict what they're going to do in a lot of different situations, I find. And retail is the year 2025 in a lot of ways has been the year of retail, right? Like, I think that retail has been the most it's like the hardest one to quantify, and in some ways has been like most impactful on anything. And it saved the market just a week ago from triggering the systematic sell stuff that would have been completely different if retail didn't come in and buy the way that it did. Oh, and then the final big one is the corporate buyback bid that is now slowly increasing again and will be fully maxed back by November 6th. So knowing that the corporate buyback bid was gone for most of October is a really important piece of information, and knowing that it comes back on in November, and that's one of the reasons for seasonal bullishness for November is just really really important, right? So that's what we're balancing. Like the balance in my head right now is still that we never really washed out the systematics. I know we partially washed out vol control, but we never washed out the CTA cell trigger at all, which is what would have turned me significantly more bullish for November. Uh, it's frustrating actually, just in some ways. If we could have just gotten the market to go down a little bit more last week, um, then you want to trigger the CTA selling, and then I think that if you could have unwound that, it would have made for such an incredible long setup into November. Instead, what we have going into November is still like kind of asymmetric risk to the downside from the systematic community, but into an environment that becomes increasingly bullish because the buybacks come on. So it's really tricky. But anyway. Yeah, but the liquidity profile of the market washed out on October 10th, at least per the Goldman Sachs note that we read. Cool. Greg, I think I answered your question there. But let me know if you have anything else. Let me check what's going on in the YouTube. I didn't open the YouTube. I opened the wrong one. Here we are. From Apex Joy, what's your view on quantum stocks now after today's candle? So kind of on that one, but just real briefly, short-term bullish, long-term bearish. I think that these things can bounce a little bit further, but I don't like them big picture. Wonder if you noticed an interesting fact that gold and quantum stocks are in a similar pattern lately. Maybe it's related to liquidity. Uh, I noticed it as you say it. I just know it off the top of my head. They both went parabolic and they both pulled back. I would say it probably has more to do with mutual fund end of year October than it does liquidity, which is something I haven't spent any time talking about, and it's getting late, so I'm not going to. But most mutual funds end their calendar year at the end of October, so you see a lot of weird flow stuff happen in the back half of October related to tax loss harvesting and things like that for mutual funds. Also from Apex Joy, Iran issued $1 billion in convertible senior notes via private placement to institutional investors under Rule 144A, priced on October 9th and closed on the 14th. Yes, I remember that. Yep. Should have added some weight to the stock. The notes carry a 0% coupon rate, mature in 2031 with no interest payment. Instead, they provide upside potential through conversion to IRN shares at 85.63. The offering was oversubscribed by 125 million. That's the MSTR playbook, right? It's the exact same thing that MSTR does. I'm pretty sure. Like very very similar debt that they were issuing with the exact same goal, same thought process. All right, I'm gonna wrap it up there, guys. Getting a little bit late. Great questions today. So, when you guys ask good questions, we get really good afternoon meetings. So, love that. Have a great night, everybody. I will see you all tomorrow.